Okay, should be ready to go. Hello to everyone again. Hello to everyone who's watching the recording. Today I want to talk about a little bit about crypto because things are heating up as we speak, and I think some things might be important today. Um, First of all, ETH is above the 4K level. It's above those highs. It's more or less what I expected. We talked about this 2 streams ago. I expect some kind of swing failure pattern. It doesn't need to be a swing failure pattern to be completely precise, but it makes sense on how a time frame to create a swing failure pattern into this supply level here, which is still my base case until proven otherwise, because many people are going to flip bullish by now, especially considering we're taking out those highs, we are going above 4K. All those things are making people very bullish, and when people are bullish, usually they buy because most people are still more or less trapped in this cycle of buying at the wrong time, selling at the wrong time. And so I expect a lot of people buying into this breakout here. I wouldn't be surprised to see a daily close above, maybe the weekly close above, which makes people very, very bullish. Probably they will look at this and will say, "Oh yeah, we are closing finally above those highs. ETH is breaking out. They're targeting." So the the most retail target I've seen was 20K or something. But I know that many people are targeting 10K. I don't know why that is, because why should ETH go to 10K besides that it's a psychological number? Um, we have some fib extensions here, which make wrong way, which make a little more sense in my opinion to target. And this is everything around, all those levels are around 6K or maybe 7K, but as I said, most of retail is looking at 10K or something like that. So for them, it makes total sense to buy into this breakout, because if you expect 10K, it's still a very good performance from here. And I mean, if you expect 20K or even higher targets, it's very reasonable to buy into this breakout from their perspective. In my opinion, 6K is my best case target for now. I mean, it's around 50%, which also aligns with ETH BTC. I marked this level out a while ago. I said it's very likely, and I'm still think that this is very likely. Also, Money Tower said the equilibrium, the 0.5, is almost a certainty. It's very, very likely. And we have the best case target up there, which would be 160% from here, which of course could then be somewhere near the 10K target. But we have many levels to overcome before considering this. And what I want to talk about today is why take profits here if I expect 10K, because a week ago, or now it's almost more, it's 1.5 weeks ago or something, I took profits on ETH here because I was buying spot down here, and I was taking out profits here around 50%. Why did I do that? First of all, because I think, as said, that we are going to reverse from this monthly supply level here. And so the risk to reward of holding on to this trade was, from my perspective, not very favorable anymore. Second of all, there is not just crypto and it's not just ETH who's performing well. So I reallocated some of my gains into other plays, into stock plays, into all that is risk on, more or less, because I think should crypto run over the next few weeks or months, a lot of other things are going to be performing very well as well. And for most of the time, my stock plays usually outperform crypto, and they're way easier to trade, and it's not moving everything in correlation. So I see my whole crypto portfolio as one big position, and I'm like, I was, when I sold ETH, I was 40% in cash or something. I reallocated something into stocks. I bought some Luna yesterday, or like all three of the Lunas, because we don't know which one is going to be the good one. And so I'm back at 30% cash, which I'm very comfortable with. And I mean, I'm 30% cash means still I'm 70% exposed. And so there's really no reason for me to fear anything. I just want to lock in gains. And I want to lock in gains because the whole thing here was one big range, or is one big range until we really close above. Yeah, I already marked this 0.5. And everything that's happening in this swing, above this swing, let me clean this chart. Everything that's happening above the swing, this is this one. Okay, let's take a new one. Above the 0.5 is in premium. And so it's very reasonable to TP into the premium, especially if your bag is up 100%. We have premium and discount, right? So this is premium. Oh no. And here we have discount. And so buying down here was very reasonable, especially below 2K. And selling here is also very reasonable. We broke the momentum here. And so I decided to TP. And TPing after such moves is never a bad idea, in my opinion, because now we're going higher and I could say, oh, it was the wrong choice and I could have held for longer and all that. But how often did this exact mindset like make you pay all back? It doesn't matter if higher time frame or low time frame, whatever, like trying to push this trade more and more and more until you're like giving back more of your gains and more of your gains, and to a point where you say, it's back here, should I sell now? Selling now doesn't make really sense. I paid back 50% of my gains. What should I do now? And then you're in a bad spot. And so I decided with the momentum break here, and especially once the 3-day closed below the swing low and we created this little supply level here, I decided to just sell something of my spot holdings here into the premium. And I'm still very happy with this decision, because should my original plan play out, I sold somewhere around this area into the monthly order block. It's 30% more. Okay, that's maybe something I'm going to miss out. If we go way higher, okay, I missed out on ETH, but I'm still 70% exposed to crypto. And as said, to me, crypto is one big position. It's one big risk I'm taking, because everything moves together anyway. So we are now in the premium, and we are also in the premium of this area from the whole. If we consider this the whole range, we are also in premium of this. And so it's definitely reasonable to be more on the sell side, even though people like to think that crypto is like going way, 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 way higher. It just makes sense to sell into the premium. And you see we have premium of both ranges now, and there is a supply level coming up. So if you ever thought about taking profits, it might be time. And I'm also going to look for a short here into the monthly supply for something like a swing short. I'm gonna let momentum do its thing. Don't short on the very first touch. See what order flow says. Order flow says that we currently have longs opening into this, and I'm going to short somewhere here, because shorting to me on higher time frames, especially those swing positions with wide stop loss, is nothing else but selling. And I just want to sell as much as I can into the premium, and I'm going to not look at the monthly, but on the daily or something. And let's remove a little bit of this. And should things look like it's not reacting at all, which would surprise me very much. Should we not react at all? I can still decide to cut my short, because if I, for example, take a 2% swing short here, first of all, I can always decide to cut early if there are no signs. Second of all, I have still like a big ETH bag, and should ETH just rip higher from here, my whole short is just a big hedge, and I'm just selling some ETH, and I'm willing to pay a price for that hedge. And should price just go higher, I have still the rest of my ETH bag. And should we reject from here, I try to sell as much as I can. It means I'm trying to, or not, I'm going to sell more spot, and also I'm going to try to get into this short here. And yeah, So to me, it makes perfect sense. More or less, it's placed like I expected it to be. I thought we are going to do this immediately because this would make people more bullish, but somehow it was reasonable also to explain it like, if you reject from here, a lot of people will sell. They're going to chase into this. They're going to short this. Now they got squeezed, and many are left chasing this move. And what do whales want? Whales want to have buyers into the premium, and so this is what they are creating here, in my opinion. And so, yeah, I think things are going to get very interesting soon, or they are already. And as mentioned, ETH is not my only play. I also have Doge. I didn't touch my spot back. I was updating here and saying, okay, good. Should we get a bigger bounce here? I consider selling some spot because, for example, if we go for this level again, if we like pump into this level and then go lower into this or that, I would pay 20%, 15 to 20% back of my spot gains. And if I TP this here, I could reallocate here. And I'm never like, oh, what if I miss out? What if I sell too much? This is never the case for me. For me, it's about making money. And if I sell something after a pump, I'm always making money. But I didn't touch the spot back. Why? Because ETH relatively quick took out all the supply levels here. So there was this 3-day, which was taken, and we rejected a little bit, and I was waiting and saying, okay, good, this is still this little range. As long as we don't like really reject hard from here, or we have massive amounts of longs, the sentiment was rather really scared still, and then we went higher, we closed above this one, we took out the 12-hour level. So there was really no reason for me to follow this plan of selling Doge here. So I hold my complete spot position, and I even added some to Access, for example. I mean, I cut my long around break even because I would have got stopped here anyway, but I've added some spot here, which I'm also really happy with. And so the whole idea is still in play. I didn't expect this, to be honest, especially the close below here made me more bearish, but to be honest, with this close below, if this didn't make me more bearish, I'm not looking at structure properly because we had a full daily close below, a full body below, and I was higher time frame still bullish, and I was saying that, and I was willing to take a big long here. But with this and the momentum break and everything, things looked a lot more bearish, but in the end it was just a fake down. Now we know, of course, but we can never know beforehand. And I really want to manage my risk, take out as much profits as I can, because I'm not here for the biggest alt season of all time. I'm here to make consistent money. And I live off trading, so I really need to extract money. And this is what I do on a weekly, monthly basis. And my higher time frame view hasn't changed much. So I'm looking to ride my spot Doge best case into this for my first TP. And should this level, like, I could expect Doge doing this pretty quick. Like, for example, ETH going for the monthly block, and at the same time, Doge is ripping into this level. If they hit together, yeah, this is like perfect confluence for selling spot. Maybe looking for shorts or something. And should we just rip higher from here? Doge is my biggest spot back, and I'm very well allocated into crypto, and I'm taking profits on the way up. And I would recommend you do the same because we can never know. Now it looks like, oh, I sold too early, but let's imagine this level. We touched this level, we even broke this level, and we went down here. It's all probabilities. I mean, you can try to predict, you can try to read the market, to study the market, to really understand what's going on, but you will never have certainty what's going to happen next. And so looking back now, of course, we could say it was the wrong decision to sell spot here. Now looking at it, and it's ripping higher, but if this level broke and we just went down from here, it would be the complete right decision. So looking back, you could always beat yourself up and say it was the wrong decision because now you know, but you never know beforehand. And yeah, to beat yourself up for something you couldn't know beforehand just doesn't make sense to me. So I locked in some gains. I'm pretty happy with that. I reallocated into other plays, and I'm ready for everything. And this is just what I can recommend to everyone. Then we have others. What I wanted to talk about, we have the 7-day level got touched, 0.5 got touched, and we entered this purple box here. I updated this in the majors update section as well. And I shared this chart like a month ago or something, not quite sure. And the idea is that this is like cycle behavior. We have 267 days from top to top. So we could expect the same thing happen. And we have from the bottom here, it always moves a little bit if I change time frame. Somehow we have around 120 days. And so I measured from the low and I said, okay, good. This area of a potential top could come here. But of course, this is not rocket science. And there is really no reason why price should follow that and should like take exact 124 days for the next top. This is just an idea. And this is just like measuring and seeing how fast crypto can move and how the cycles behave, because this is what people oftentimes forget. We get the meat of the move in like 10% of the time. Like in 30 days, we pumped 106, 30% on others. And so we have, for this time frame, we have another 30 days. Oh, no, sorry. We entered the time frame right now, or yesterday or something. Come on. It's like 22 days for 70% for this 3 drive into the 0.5. So this is definitely reasonable, because 130% in 30 days and 70% in 20 days would make perfect sense, especially considering if we start from here, it's 100% and we have around 30 days. So crypto can do that. This doesn't mean it should or it must happen again, but it's definitely a nice game plan to have in mind how fast some things like move and how long a bottom take. Look at this whole range here, more or less. I would say this whole thing here is a range, even though it's very ugly. It was 140 days where price moved something like 40% up and down, up and down. It did nothing, more or less. And then in just 30 days, it doubled. And this was on others. So, yeah, this is the whole shitcoin indicator. And this is like the pure risk on thingy why most people are in crypto. I'm not like fully big exposed to those low cap shitcoins, but I have some, and I want to see, especially this is my high risk on indicator, more or less. So if this thing starts to outperforming, this is what people refer to alt season, even though most people don't like it's never enough. So it doesn't really matter how long it outperforms and how big it outperforms and whatever it does, it's never enough. The alt season is just coming. And this is, for example, a good indicator. Every time this thing goes vertical, it's like the final push of the move, and then usually we sell off very aggressive, very quick. So I'm having an eye on that, because as I said, it makes total sense. 3 drive. Also, if you look at some altcoins, you will see many altcoins forming something like this kind of structure, like 1 pump, 2 pumps, and then maybe a third one. And Ondo more or less looks exactly like that. So you see it's this little double top. We have the consolidation for quite a while. We have the big outperformance, new 1 pump, 2nd pump, retrace. So this is more or less the same chart, in my opinion. The same area, at least this area of the chart is the same like Ondo. And a lot of altcoins look like that. And people would love to see something like this, like almost a 10x in just a few months. But what this cycle is telling us, this is probably not going to happen. It's probably going to happen very quick, very violent, very fast, so that everybody's just like getting euphoric and thinking this is the beginning. And it's so you need always to consider the timing confluence, because people wait like month on their place and then it's like over in 30 days. The whole performance happens in 30 days in just 1 month. And so people think this is just the beginning, not because of price, but because of time. Because we measure our life in days, in hours, in years, in weeks. And so if you wait for something for several months and it's just happening in such a short time, it feels like it's just the beginning, because you waited and waited and waited, and then something happens so quick, and then you think, oh yeah, now it's starting. This is all by design. These quick moves like trigger the exact emotion. And on the way up, people are bearish here, more bearish throughout this, and they get bullish on the way up, and they start buying into this because it feels like such a short pump. And so it's always still the right time to buy. So this makes perfect sense to me. And as said, I'm not so interested in others, but I have some. And this is my full-blown risk-on indicator. We have ETH BTC, by the way, we have it right now in supply. We have also here another supply. So it definitely makes sense to expect a pullback, but I know that crypto sometimes just doesn't make any sense anymore. So to me, I always try to be prepared for every outcome in crypto. That's why I say I take profits on the way up. That's why I say I try to short there if possible. So should we reject from this area? I just want to be prepared with some shorts or at least some profits in my hands and some more cash to rebuy should we visit such some of those levels. And yeah, so a pullback makes sense. Doesn't need to happen, but definitely makes sense. We have also BTCD just breaking down the level right now, which is probably like our next leg higher right now. And also what you will see, this is also very important. A lot of people are just looking at tether dominance, and right now it's also falling through the demand here. But what it did before was it was just hovering around here, and ETH was just going higher. This is not because so ETH is pumping higher because liquidity was flowing from other sources, not from tether dominance. This is why I like the stable dominance chart, because you see it did the same thing here. So it was not a better indicator or something, but it just shows that liquidity comes from several sources, several stable coins, and not just from stable coins, but also from BTC, from other places, from real currencies, euro, dollar, yen, whatever it is. Liquidity comes from several sources at once. And so, like we saw since yesterday, tether dominance doesn't need to nuke here for ETH to rip a good chunk higher, because the liquidity for ETH seems to come from BTC, because BTC is either at zero or yesterday it was even red, while ETH outperformed. And so liquidity is flowing not just from Tether, but also from BTC. And this is what we saw because BTCD was nuking. And now we lose the demand, as it seems. There comes this major trend line up, and I'm drawing these trend lines not because I want to trade around them, but a lot of people are drawing this kind of trend line or channel or whatever. And while we could definitely reject from here, and looking at the stables and BTCD, and like I showed you the ETH BTC supply level, it makes sense that we see some kind of reaction. And it makes also sense from a liquidity perspective for all those people looking at this, looking at the trend line, making this little bounce here, making people think, oh no, we are going to go higher from here, the trend line is holding, just to rip lower into the demand here, which would be another leg like here. I mean, we're talking about 4 to 6%. So the trend line might give some reaction, and it could align with the ETH monthly level, it could align with the Tether level and with the stable level and with everything. But I'm not necessarily expecting a big reversal from this trend line. But I definitely expect something from here, from this little area, because there's a lot of demand here, and this demand created a strong move up, higher. And so I would keep this in mind. But should we lose the trend line, things look very bearish on this chart. Should we lose the demand here and this low, then the thing what everybody was waiting for could probably happen, but it's definitely not a given, and I would take it level by level, of course. So always keep that in mind. Liquidity comes from several sources. Right now, a lot of liquidity is freed up from Bitcoin, and this is also the longest and most aggressive prolonged downtrend we saw on on BTCD, because this all happened like 14 days, and this happened already 30 days, and now we seem to go lower again. So a lot of liquidity is freed up from BTC. That's why BTC is doing nothing right now, and ETH is pumping. And right now we are almost at the monthly level, and so a pullback makes sense, but doesn't need to happen. Time will tell. Crypto sometimes just doesn't make a lot of sense, What else did I want to talk about? We have ETC, so ETH dominance, which is ripping higher. Also here in some kind of supply, so keep that in mind as well. But it seems that it ignores all those. We have this one here, and it's more or less the same chart than ETH BTC, but it has its own little nuances and can provide another good signal. Or confluence. Total 2 without stablecoins is ripping higher. It's leaving the downtrend, the channel, whatever you want to call it. It's definitely ripping higher. Now we're at the swing high. Pullback makes sense. If we break out from here, the next logical level is to swing high here. And should we break out of this one, it opens up potential higher targets from here. I haven't looked if there is something on. We took this already here. Yeah, but there is. So I would not expect that this all-time high or this swing is not reacting. Key levels, definitely key levels. Also on total 2. We are approaching this area on the chart. Right now we are fighting the local swing high. So as said, pullback makes sense. Does need to happen, though. Talked about others. Yeah, the Dixie doing Dixie things. We have the 5-month level, partial level reacting here. Now the question is, what happens to the dollar from here on? We made a higher high. We started to range here. We don't have volume data, right? No, we don't. So the dollar lost around 12%. And the dollar is not just affecting the crypto market, it's affecting the whole global economy, especially oil prices, commodities and all that. A lot of things are traded in dollar. And so this was a lot of turbulence for the whole market. And right now it's creating higher highs again. And at some point, this will definitely go higher. And you need to consider that we have those currency rotations, and it's not just from ETH to BTC, but it's also from dollar to euro. And the euro, for example, ripped the whole year. Why? Because a lot of people probably put their money from dollar into euro. That's why maybe also those crypto euro pairs were more important this year than they were before. Maybe, I don't know, because I'm not studying them since years. But it's definitely worth noting that those major currencies in the world are a lot more important than stablecoins, for example. And so the dollar changing its behavior and gaining and losing strength is affecting the market in quite significant ways. And what could happen from here on? Now we have like the stocks or the indices, the stock market at all-time highs and everything. So whales probably are looking to take profits, and once they rotate their assets, their stocks into currencies again, some currencies could gain strength. And why would you buy as a billionaire or whale or whatever? Why would you buy euro when it's so expensive compared to dollar? If you sell your stocks, you probably want to store your value in dollar afterwards if it's cheap right now, because if you expect the dollar to outperform other currencies by like 8 or 10% or something, and you have billions and you make another 10% on top while the whole market is bleeding because you and your friends are selling off and everybody's selling into the dollar, which means your currency is also gaining strength again. So this makes total sense. So I could see the dollar rising even while the whole risk on thing is on. But also here we take it level by level. Right now we react from the level. We made a local higher high. Doesn't mean here, something needs to change from here. We could also go lower for those key levels. But for now, the dollar is in a key level, and this is affecting the global markets. Yeah, so I think I talked about everything. B-Wall is probably not as important right now, but it's at support. And we have E-Wall almost at support, a little bit above. And every time we touch this support boxes here, something violent happened to ETH. And while the whole move up was on decreasing volatility right now. I expect something very significant happening here soon. This might be a rip to the upside, but looking at the ETH chart and the monthly supply and the fact that this is a big liquidity key level of people going to be long above those highs probably, I would rather expect this violent move or this volatility happening to the downside. As long as this key level is not broken, this is the more reasonable way to think about this, in my opinion. But definitely something is brewing. And if this wasn't volatility right now, you can imagine what it will look like should this get more volatile again. So we want to be on the right side. We want to take profits. We want to be prepared for everything here. But I think overall the crypto market is looking quite good for another leg. And if we are disciplined, take profits, do the right thing at the right time, we can profit a lot from crypto, especially those violent higher time frame swings on altcoins and everything. They can double your portfolio if you play it right, and if you're not greedy. So don't be greedy. Take profits at the right time and be ready for downside and reallocate those profits into other plays or into retracements, and you're sorted. This can be your easy money plays if you're in control over your emotions and if you understand the structure and the liquidity behind the structure. All right, guys. That's it from my side. You can now ask your questions about this topic, about other topics. Doesn't really matter. If you have questions, if you learn something, if you want to understand something better, it's your time to ask. That's great. Glad to hear that. And I mean, also if I look at stocks, especially the risk on stocks, they're performing quite well. And as said, the whole market is connected. And a lot of those risk on assets are seem to be primed for a leg higher. And also considering that they probably want to implement the narrative or like reinforce the narrative of rate cuts are bullish, and we probably see rate cuts in September. I could imagine that something like this is in play. And I mean, for the whole economy, rate cuts are bullish indeed. Because if you're a business, if you're a company, like not just crypto imaginary company, but like a real company who provides real value and has real employees and products, lower interest rates are really bullish for your business, because this means, so the whole economy is built on making like debt, and if you can like acquire cheaper money for your business and reinvest this in machines and people, in products and whatever, and ads, your business will grow faster. So lower interest rates means the economy grows faster, and a lot of businesses, especially risk on, like newer ones who really need this kind of money, they like in reality they grow more during this time. This doesn't mean the stock needs to go up, because in my opinion the stock has nothing to do with the company itself. The stock is just like fundraising on steroids for these companies, and it still makes sense that if the company grows, that the stock goes higher as well. And oftentimes they reinforce this narrative until they pull the plug, until like they don't use this narrative anymore. So it makes sense that risk on assets are going to go higher with low interest rates. The question is for how long? And the question is also, why do they lower interest rates? Because if they lower interest rates because they can and they want, that's great. But if they lower interest rates because they are too late and something's breaking in the economy, that's not so good. And so we could see this final push to the upside, and usually the final push, like on others, is the one where everything rips the most, the biggest garbage, the highest risk stuff rips the most, because this attracts the most buyers and the most retail buyers, because they always just look at performance, and if a stock rips like 200%, 300, or crypto, it doesn't really matter. People are going to buy this because it seems like it's the next big thing, the good thing. It's like buying into pumps is fun instead of buying into like scaling into drawdown, or not drawdowns, like dumps. It's not so much fun because everything looks like shit. And so the last part of every cycle is usually driven by the highest risk, and reinforcing this narrative that rate cuts are bullish, because rate cuts, or like once they hiked rates, it was very bearish for the market, but because of inflation and all that. And now people think so it's starting right now because they cut rates, so easy money is available, and everybody thinks, or most people think, this is now bullish for the market, and it maybe is for a short period of time because of reinforcing the narrative and all that. And maybe a bigger problem will arise soon after, and it will, like, the cuts will not be because of they want to pump stocks, but because of they want to save the economy. And if you think about the whole economy as like only, in my opinion, it's only like completely controlled, and so they control this destruction of the economy by high rates, and destroy more or less a lot of businesses, and force like the garbage out of the market, and which is good, which is also a cleaning process, of course, because with low interest rates, everybody can build anything with cheap money. And what we saw since 2022, since 2020, that a lot of businesses went out of business again because they just weren't profitable. And if you can't afford like buying money from the bank, and you're not profitable, you won't make it. And so only the good ones, the profitable ones, the tough ones survive. So this is also a cleaning mechanism. But I think this whole thing is so controlled that there's really nothing organic to the whole economy anymore. And they just control everything. And so they also control these narratives. And they want to have people believe that every time rates are getting cut, this is bullish. And like they reinforce this kind of behavior and this kind of thinking so much until people believe that, and then they can just pull the plug for one time, and this time will be maybe so big that it's wrecking the most amount of people, only to reinforce the narrative again for the next times. Because usually once people got wrecked, they think the next time, they think, oh no, I know this behavior, I know this, next time I don't believe this shit, next time I do it differently. And then it just does the same thing like before. The same like Eric Trump was telling people to buy, it went down another 50% or 60 or something. Then it reached his level again. It was above his entry of, it was 10% above his entry. And he was saying like, oh, I told you so, I told you so. Yeah, man, but 3 months of drawdown, 50, 60%, and then you're like above 10%. So this is just really just a big joke, what he's doing there. And now he said, buy the dip, which just means people were like, oh no, I know when Eric Trump says buy the dip, that's usually not a good time. But what he did was to reinforce this kind of behavior, this kind of thinking, and he was just using his own discredibility to build another trap, of making people think he's still lying and he's not on point, and people didn't buy, and now we repair, and he's the hero again. He is the one who told you. And the next time, the question again is, can we trust him this time? Is it right? Is it wrong? I think the next time it will be wrong again, because usually people forget what happened before. People don't take notes. People don't write things down. They just feel what's right to them. And the last time was good, so it will be good again. The last time was bad, so it will be bad again. And this kind of black and white thinking is what whales use, and they have strategic plans to manipulate people's behavior. And so also the Fed and the whole rate cut thing, in my opinion, is just one big tool in their toolbox to make people buy and sell. Because as we know, in the end, it's only the whole market is just about buying and selling and about narrative. And so, yeah, I think the whole expectation of rate cuts could be very bullish. Maybe the first cut is bullish. Maybe it marks the top, because looking at this area, the rate decision is somewhere like early September, if I'm correct. And so this would still, as I said, this is no rocket science to me. If it's in this area, if we top around September, it all makes sense. Especially because people are going to expect a bullish Q4, and I think the Q4 will be the complete destruction this time because everybody was is like, what do they call it, like October and Moonsember and blah and garbage. And I mean, this kind of thinking is so deep in people's minds that they are probably going to be very bullish for Q4. So I'm not bullish Q4. Here we have a question. Are you using negative fibs on local swings? Can you check on ETH from April low to June high? I think I did that, right? Like April low. You mean April low? I mean this one. Yeah, it's a different one. It's yeah, I know the swing you mean. Yeah, would be here, sweep of those highs. So from a liquidity perspective, many things make sense. So imagine this will also be complete destruction for many because we're not just taking those highs, we're also taking those highs, and this would make people again very, very, very bullish. And this high here, even though we then are already above the monthly block, I consider this whole area here as key level because we either front run it and go lower, or we sweep it, make even more people buy, and then go lower. Because what happens if we sweep it, as I said, people will going to buy this breakout, and if we not sweep it, people are going to sell this because they say, oh no, we're going to reject, and then the price goes lower, and a lot of short liquidity is building up above these highs. And once people get bearish again because we maybe take this key level here below this low, and then we rip higher again, people probably sold this again, and then they chase this again. So we have again buying and selling around every key level. This is what key level do. There's not just a block behind an FEG is a key level. Every swing high, every swing low is some sort of key level, especially in higher time frame. So you can trade around those levels as well. Yeah. The 7th of April. Ach, you mean this little swing here? Yeah, sorry. So you mean from April to June. You mean this one? 11th of June should be here. Yeah, you mean this one. Yeah, I mean more or less rejected right from here. But in this particular case, I would rather consider this because of the supply. Can use the fib for refinement. And what I really like with these fibs is like there are extension tools. So I don't use them within the range because it just doesn't make sense to me, because usually I have some supply and demand within a range, and I have the normal fibs. And so I for example, I just use them as extensions above all-time high, above some ranges, major highs, major lows. But there's certainly something to it. But in this case, it's still hard to get in, because where do you put your stop loss? It would be above those highs and everything. So yeah, to me this makes more sense. But whatever works for you. It's not that I'm saying this is wrong or something. I just don't use them like that. And you see, I could measure everything, a swing, and I get always a different level, more or less, but it's still the same area, and it's still around this very, very important key all-time high, swing high here. And this is definitely a key level, because this will create a lot of emotion, a lot of buying and selling will happen around this level. So this is for me very important. We can use those as refinement and as confluence, and I like them as extension tools. So above swing highs, key highs, or ranges, or all-time highs. June 23. Yeah, to be honest, this is not valid for me because we didn't reach the 0.5. So for me, I use negative fibs only if if this is my swing low and this is my swing high, and we retrace all the way to the 0.5 in my playbook, it's valid. And we didn't do that. We did it here more or less. We touched it. That's why it probably reacted here. But as I said, I don't use it intra range. But if it doesn't touch the 0.5, and it didn't here, for me it's not a valid one. I can show you examples on Pepe, and Pepe works incredibly well. And here we went way below the 0.5. So this swing here, this is a valid negative fib swing for me. And I said I can show you an example on Pepe. Pepe was, it's still there actually. Pepe was like perfectly reacting to them every time we went for a new run, for a new all-time high. So why is it up here? No, don't use it in log. Doesn't make sense. Let's remove all that. So Pepe, if you just traded this, if you just sold the minus 0.5, it was actually a pretty easy play every time. So here we went way higher, right? That's not a perfect example, but we have the first swing. We retrace to the 0.5. So in my playbook, this is valid. Then again, the next swing, we retraced this whole swing. Let's remove this. We retraced this whole swing to the 0.5, right? A little more actually, but this is making it valid for me. Once we touch the 0.5, and you see perfect reaction up here. Then again, we have the next bullish swing. We went below the 0.5 of this whole swing, and again, it was a great time to sell up here, even though it was not perfect. It was not like rocket science precise, taking a 100x short up here. But if you're like spot Pepe like me, this was definitely a very, very, very good target. And now we can measure this and this. And should, I'm always talking about should, because we are not even above the 0.5 yet. We are not above this big supply area here. I mean, this is like pretty hard to overcome. But if you close above this one and take out this area here, I would argue that new all-time highs, if new, let's say like that, if new all-time highs come, this could be a potential price discovery target here, as it was before, because we have one or two examples that work perfectly on higher time frame, and so why not expect a third one here? But before we can consider this, we need to overcome this area here, and this area is like pretty tough to overcome. And so if you take longs here, the first target should be somewhere here, and not hoping and praying for this to happen again. Just because it happened 2 times, it doesn't need to happen a 3rd time, right? And so, as said, retracement to the 0.5, perfect entry, perfect target for price discovery. This is how I use them. And you see, it also aligns, most of the time it aligns more or less with the 1618, but the 1618 is very much known. And so a breakout above the 1618 makes sense, because if you, for example, want to attract buyers at the highs in price discovery, you just send it above the 1618 and people immediately expect the 2618 or even higher targets because we closed above. Yeah, this is like going higher, but it never does. And on higher time frame, I'm always talking about areas, even though this is a very fine line. I don't care about like a breakout on this, because this is market makers know that they know that people are looking at certain areas and certain levels, and they say a close above or a close below, and then it's going higher, and this attracts new buyers. And if you look at the Pepe community, they're always playing with this extension fibs, and they say like a 60x or whatever to this and that extension, And if the first extension is hit or overcame the first extension, they say, okay, the next one is in play. And this is exactly what market makers want, and that's why they make it look like this. And so the minus fibs can be better confluence, especially the minus 618 here, as you can see, was like perfectly. I mean, we overcame this one here as well, but it's still the area. And the thing is, if you bought spot, we talk about higher time frame here. If you bought spot here, you started selling here, and then you think, okay, it's going higher, but it doesn't, and it breaks down, and you sell the rest somewhere in this area, you're still selling the top. It's not about the pico top. You don't need to sell here, exact here, to be profitable. No, you want to sell in this area. Even if you sell here, you're still up. If you accumulate it down here, you're still up 160%. It's not like I was holding Pepe from all the way down here. I was selling some here. I was buying some back here. So overall, I hit from my first buy. I hit a 20x on Pepe, and I was never selling the pico top. I sometimes came close. Sometimes it was very close, but usually I sold a little more on the breakdown. And here it was the same. We broke this down. I sold a little more, and then I saw this pump here, and this looked very fishy to me. And then Monitor said bearish Chinese New Year and all that, and so I sold the whole stack here, the rest. And yeah, of course, it's 20% lower than the all-time high, but it's still, considering that my entry, that was my first big entry. I think I bought my average all the way up somewhere in this area. Then it was still up 500% or something, instead of like 800, right? But I was buying and selling the whole way up and down, and I just want to sell around the top, because this will almost brought me back. This had almost brought me back to my entry from here. And so it's not about the pico top. It's about, so I see this as area. And if you have some spot backs, if you look for extension targets, see it as area and just take the profits, because even a close above means nothing. This is an area you want to sell at. And you can always sell on the breakdown the rest if you're not, like, if you think it's going higher. But what I did in the beginning, I thought, okay, it's going way higher from here, but it didn't. And then I just changed my bias and I sold. The same way I did to ETH. We broke this down and I just sold some of my spot, because there's always another play. It's not just that ETH is going to make me rich. It's never one trade that's going to make you rich. So accept that structure is turning against you, and this could very well the beginning of the end here. Nobody knows. Even I could explain you 30 minutes why it makes sense that we're going higher, but it could explain you 30 minutes why it could go lower. So if the breakdown occurs, I'm just selling something, and that's it. And if we go higher, I'm selling more, and if we go to the key levels, I'm buying with my profits. And I can repeat this and repeat this and repeat this, and I don't need to be holding on to this one idea and hoping that this one idea goes to my final TP, because then I'm going to have so much money. No, it's not one trade, not two trades, not 10 trades. It's hundreds and 500s and thousands of trades, which are going to make you rich long term. And if you became rich from one little trade, it's usually not repeatable, and you will always hope that something like this occurs next. But the real skill is not that one play goes exactly like you've planned and you make a lot of money. No, it's many plays. You need the skill of having many plays which pay you again. And if you fear selling, it's because you more or less, you're scared that you lack the ability to take another winning trade. And that's why people hold on to this idea, even though they know they should probably consider taking profits. They still hope that this one trade is going to make them so much money, because they fear their ability that they take another profitable trade, and they fear the ability, or they fear that this is the last leg and this is it, and if you're not on board, you're going to miss it. And how often was this the case? I mean, okay, if you were in the market in 21, you probably, if you know what you did, you made more money than this cycle, because it was way easier, more or less, even though the swings were a lot more aggressive. So many people probably didn't even made more money than this cycle, because like handling all of that, I mean, this is also not fun, right? I mean, we're talking about a 50% correction in 10 days? So this is also not fun. People say 21 was so much easier. I doubt that, to be honest. I mean, of course, if you just bought and hold and if you were early, the gains were amazing, also on majors. And this cycle is like more or less a little bit of a disappointment from major side, especially like altcoins, because Bitcoin did incredibly well. And so this is really the fear of missing out and the fear of like not selling and like hoping for this one trade to make you rich is most of the time because people fear they lack the ability of taking another profitable trade. But there are 1,000 opportunities every day if you know what you do. And even if you don't like trade low time frames about it, there are hundreds of opportunities every single year, and you will have those swings every single year. But you will only be profitable if you take real money home. If you don't hold for this big breakout idea and blah, no, you take home real money, and then you reallocate this money into other plays. And as said, these can be your easy money plays. Even though from an emotional perspective, trading altcoins is very hard. But if you just buy around the lows and sell around the highs, and you just keep on repeating this process without hoping for alt season all the time, you could have made so much money this cycle already. This is just a discipline thing. And every time price is here, people saying, no, no, it's going lower, it's going lower. And every time price here, no, no, I won't sell, it's going higher. It's every time it's the same. And even though I missed out this little leg here by now, and if it goes way higher, I probably sold too early in the eyes of some people. But as said, if you just reject big time from here and reject like 30%, it was the complete right choice. So we don't know before. We just want to take home real money and real gains and reallocate them into the next swing once the opportunity is there. Okay, guys. Questions? Anyone? Please not all at once. Because other than that, if nobody has any more questions, I'll probably wrap up the stream right now. Everything's clear. Perfect. Glad to hear that. Okay, guys. So I wish you a great weekend. Stay safe. Take home profits. Have fun. And let's talk next week. Bye bye.